Welcome back to Get Wealthy with me with the Modern Savvy CPA. That's me, Sharon. Today, my guest is Jay. Jay is an entrepreneur, builder, all around smart guy who's also super young
Handsome.
and handsome. Oh, don't forget handsome. How did I forget handsome? I'm telling you, I think he's single too, girls, just in case. We were just having a super good conversation that him and I have different opinions on. And I am wanting to build my knowledge of this subject. So that's why we're going to continue the conversation with on air with you guys. So what we were talking about was Bitcoin and the Coinbase world and that type of stuff. So my understanding of Bitcoin is I'm a very traditional investor. That does not mean I'm a conservative investor because I don't consider myself conservative. Neither does my husband, so he thinks I'm nuts. But I consider myself a calculated investor. So because of my economic background and my finance background and my accounting background, I am used to looking at stuff with looking at the backing, understanding the balance sheet and the income statement, which are the financials. Where is the company also looking at their forward earnings? Like where are they? What do their books look like? What do their number picture look like? And then what are their plans? Like, what are forward earnings means like what moving forward, what is their plan to make money? What are they selling? Which widget they're selling, that type of stuff. And I'll tell you why.
Sure.
And before we go into the Bitcoin story that we're having a conversation about, which is super interesting, is because when I was younger, so, Jay and I are you'll learn more about Jay because he and I are actually, our parents are from the same country, Guyana, South America. Woohoo, all the
Yeah,
Guyanese.
let's go.
And we have that immigrant mentality within us that came from our parents and our grandparents.
Mm-hmm.
But yet, we also have we have the best of both worlds, I think. We're taking the good from our culture and the good from the American culture and kind of blending it together
I agree with that.
and working with it. And I think that that's what makes a lot of people great that make it here or are successful in America. So our culture didn't invest in any type of stocks,
Nothing.
bonds, nothing. The only thing I think that they would invest in is maybe some gold, like gold jewelry, right?
Mm-hmm.
They invest in education and real estate. They know you got to buy your own land. Land is a universal world from the days of the Bible to today. Every culture understands that land is valuable,
Mm-hmm.
right? Agreed?
Yep.
And so that's what our culture is. So learning more about investing in financial markets is something that's part of our American cloth.
Yeah, that's
right?
that's the new version. That's
the new version
exactly
of us,
first
right?
generation version of that.
Yes,
Yeah.
because we understand that land alone, diversifying your investment is a
Mm-hmm.
big thing. Land alone, gold alone, education alone is not the way you diversify. So I wished when I was saving in my savings account at First Federal Bank on Fordham Road in the Bronx,
Okay, let's go. How long are we talking? How many years ago?
1985, 86,
Okay.
I used to get $3 as my allowance. Okay. And I would put $2 in the bank and I had $1 to spend.
You're that good at saving? Oh my god! I get $3. I'd save a quarter.
I was 11.
Yeah.
What was I? Yeah. 11, 12, maybe around that time. So I ended up having a good maybe $300 in,
At 12?
maybe we moved from that apartment where I couldn't walk and go to the bank anymore.
Mm-hmm.
I think in 88, maybe 87, late 87, 88.
Mm-hmm.
So I'd say between 85 and 87, I must have had maybe $300 in that savings. It was called a young savers account.
Mm-hmm.
So the banks used to save at that time, but cash was our king then, right?
Mm-hmm.
So if my dad had said to me, and I'm going to look this up, I'm going to find out what Disney stock was Walt Disney stock was in 1985, and if my father had said, okay, my daughter, buy yourself two Disney stock. I don't know. Disney stock is $110 today. So,
Yeah.
and it's probably split a couple of times. So I cannot even imagine if I had gotten, let's say, five Disney stock
Yeah, right.
in
And then compound it on
and
top of that.
compounded and
Yes.
compounded and
Yeah, compound
compounded
it. Yeah.
in 1986, let's see, right?
Yeah.
Can you imagine?
Yeah.
But my dad was an immigrant who came here, did not know nothing about the financial markets, knew that he just had to put his money under his mattress, which means in a checking or a savings account earning nothing really, because you know the price of inflation. If you're not saving at the rate of inflation or above, you're losing.
Not
right?
not to mention the bank fees alone. Like
Yeah.
just the cost of having the account. You'll lose
Yeah.
anything you'd ever gain in
Right. So we didn't have that experience. Whereas other people during that time had the experience with the financial markets. It was available to Americans that were upper middle class or upper. They understood the financial markets. We didn't. And I always wanted to invest in the financial markets. So when I was in my 20s and I was in college, the dot-com boom was big.
Okay. That was all right.
So I know you guys, you're young, right? So you might
No,
not.
but I know
You
well.
know of the
Yes,
.com,
for sure.
right? So I'm young, I'm stupid, I don't know anything about the financial markets, and I'm going with the momentum of everything. Everybody's like phone.com, this.com, that.com. So I got maybe $2,000 and I'm like, all right, I'm buying phone.com or whatever. It was like $100. So because I'm all about the hype. This is what it's going up like crazy, it's going whatever, and I'm just investing. I lost my underwear.
Really?
Because looking back, when the market crashed, I think maybe what 2000.
2000 on the dot.
Yes, I don't remember exactly when. Around that time when the market crashed, my phone.com that I paid 100, and that's just an example. I think I must have bought 4 or 5 different stocks on momentum, nothing else. I didn't look at the company. I didn't
Yeah.
like these stocks are going up like crazy. So I'm like, all right, I'm buying. I'm gonna spend my $2,000, and I did it. And I think I sold phone.com for 2 cents.
Damn. But what a learning lesson, right? What a learning
it was
lesson.
a learning lesson, yes, but I
Yeah.
still didn't have. I got so scared
Mhm.
that I didn't get back. I mean, yes, in my retirement and stuff like that, I have money people that manage it for me, right? So I didn't learn enough about the financial markets, or I was too scared to go back in myself.
Okay.
Like, yes, I would, whatever my SEP was, or my Roth IRA was, or my husband's stuff was, that's what I did.
Got you.
I didn't really invest in the financial markets to say that, okay, let me try it again.
Do you think it made you more risk averse after seeing your money lost?
it scared me for a good while, right? So then I went back to the traditional investing that our parents did,
Gotcha.
which is, okay, real estate is the best
Yeah.
bet.
Yeah.
I can ride that market out, because also after that market crashed, the real estate market crashed too.
Right.
Like,
Some years later,
6,
yeah.
7 years later. And did I not know? I didn't know that the real estate market was going to crash, because by then my financial knowledge got better. I was in school. I understood how to read financial statements. I understood to look at the health of a company. So that's how I invest now, by looking at the health of a company. Whereas with the phone.com stuff or the .com error, I just went with the market. Like, this is the momentum of the
Yeah.
market. Everybody's doing
Like you
this.
got into the excitement. The
Yeah.
excitement kind of.
But most of us, that's how we invest. Everybody's doing this, so let me do this,
I agree.
right? And then, unlucky for me, I wasn't on the top. People made money in the .com era. If they sold at the right time, they sold before it crashed. You made money, right? A lot of people made a lot of money
Yeah,
in the
for sure.
.com era. But for me, I just held it. So I was not It just, and it wasn't worth anything. If you looked at the financials for these .com era, they had no assets. Their stock was going up and down just on the momentum of the market.
Yeah.
You know, stock will go up if the thing about stock prices, it will go up on the, not the value of the stock will go up on what the market is buying and selling. So how many times the market buy, how many times, you don't have to have a backing.
Right.
It's just the momentum of the market that's going to go up. But in the end, what's behind there, you know? So I learn now to look at the behind, but it took me a good 10 years to get out of that hump.
But again, that's why I still say like it's a learning lesson, because one a mentor always used to say something is either working on you or it's working in you, and I totally agree with that. Right? Like there are so many times where I've lost money on something, and it's a loss in that moment, but what it's doing is it's still working on me as far as my growth, my knowledge.
Of course.
So the same thing is happening to you even in those losses.
What's not a
per
lesson
se,
is
you
a
know?
blessing.
There you go.
Right?
Exactly.
What's a blessing is, you know, can be a lesson, but you got to make something out of it.
Yeah.
So yes, I did learn how to be better with finance, learning how to look at a company and read the financials and stuff like that. So this is where we come with how I invest now, right? So you were asking me this question before we started the podcast. Jay and I was talking about the Coinbase market, and we were talking about why I don't invest in that. So this is the reason is because I don't see their financials like the .com era. That's what their financials look like.
I get you.
So for me, you know, investing in a company, either I have to believe in what they're doing and that they're investing in something like their R&D or whatever it is that's happening. Like, for example, Microsoft didn't make money for 5 years. So if you saw the potential in Microsoft and you still stuck with it, then now it's a big deal, right? So you have to see the potential in whatever widget or it is that the company is doing. So not only so you have to see those two things, you know, right? So you're looking at their financials and you're looking at their potential to make money. And those are two things that I look at when I'm investing in a company. And so now I do invest some of my own money, actually a lot of my own, in the stock market, right? So I have my Schwab account, and my two sons and I, when COVID happened, we did 3 things.
Okay, what are they?
Well, I did 3 things. I read a lot of suspense and romance novels.
I thought you were going to talk about something financial.
That's one thing.
Okay, all right.
That's one thing. I read a tremendous amount. Listen, you're freaking bored.
No, I get it.
I
get it.
And I think
just know it was the segue. You just hit like a right corner. Okay,
I'm starting with one of the things. Okay, right? It doesn't have to make sense. I'm just telling you what I did. Okay. So I read a lot. So I mean, that helped me to be reading faster, right? So that was a good thing. I still read some, but more audiobooks now because I don't have time to read. I think I caused the yeast crisis in the Eastern Seaboard because I baked a ridiculous amount. If you go on my Facebook right now, you would see all of and look up 2020. I baked everything. My neighbors would call and be like, "So what are you making today?" And it would
you just give it to them as you can eat it all.
500 pounds. Yeah. When I'm baking, I'm not eating. So literally everybody called. They came. What am I making today? Then they started requesting, make this, make that, make that. So I baked, and there was a yeast crisis and a flour crisis, maybe an egg crisis.
Actually.
Yeah. There was no yeast at BJ's, and flour was a hard thing.
Yeah, I remember toilet paper was a crisis.
Yeah, but that was a meant up crisis. You could use water if you don't have toilet paper. Yeah. Just an FYI. I don't know what you could use if you don't have yeast.
Yeah, or wipes. Yeah.
So, and then the 3 of us, the 2 of us, my older son and I watched a lot of CNBC. I still watch a lot of CNBC. So this is 2020. This is 2025. 5 years. And CNBC is on all the time in the back. I mean, I watch a lot of other financial news too, but that's like my partner in my office. And I'm like, all right, we're not going on vacation. So we knew we weren't going to be able to go on vacation. So I had maybe about $20,000
Okay.
sitting there, like, all right, we're not going on vacation. I'm not buying any clothes. We're not doing anything. Let's do something with this money. So we started investing in the market. So after COVID happened, then a bunch of stocks dropped. We started investing. So Royal Caribbean was one of the stocks that I bought because it dropped. I bought Boeing that went up and down a couple of times. And then I started building my portfolio.
Okay.
And my older son, he had a Roth IRA. So I'm like, all right, add some money to your Roth IRA and let it be self-managed, work on it. And so we started looking into things. We started investing. I would get his opinion. He would get my opinion. And that's how we did it. Then my younger son, he's like, all right, I want to do this too. So I opened this little account for him, this little Merrill Edge account, and it's in my name. And I'm like, all right, here's $1,000. Learn the market, learn how it works, but make sure you're doing your research. Make sure you're doing this. So
you gave him access to the account so he can now do whatever
it's
he
in
wanted.
my name.
Okay.
I do see what's happening.
Uh-huh.
But he was 15 at the time.
Okay.
And so he couldn't get an investment account under his name. We had an investment account, which was kind of a child investment account. It was called Stockpile. But then they were charging all these fees and whatever. I'm like, all right, no. So I opened a separate account that different from my broker account. I'm like, all right, go to town, buy yourself one NVIDIA, buy yourself one whatever, and just do that.
Okay.
So, and I was monitoring him. My older son was already 18, so he was doing his own thing. He actually bought AMC, and AMC to me is a meme momentum stock because they had no backing. Like they were gonna, and AMC and GameStop. I don't know if you've ever.
Yeah, I remember the whole GameStop
Yeah, so AMC and GameStop were those two stocks that went crazy.
Yeah, Trojan horses. Yeah.
And they had no backing whatsoever. Like they were worth crap. On paper, they were worth crap, but on the market, they were.
It's because of the power of people.
Yeah, the power
right?
of people.
Just
if you're buying it and you're whatever, but it didn't. So I told my son, I said, listen. So you have to understand what you can't be shocked when a stock like that loses, right? Because it has no backing. So I said to him, I said, listen, I know you're investing in this, but you got to watch it. Like you could lose all your money because there's no backing here. And AMC went down to, I don't know what it was the other day. And a few months ago, I said to him, just before it started going down, I said, did you sell those AMC? You have to know when to sell. And he made a lot of money on it. He did. He sold at the right time and he made a lot of money. But that's kind of something you have to watch. There's no rhyme or reason behind that. Right? So it's if you're lucky and you hit that's where luck comes in. I personally think.
I mean, it's true. Like there is a degree of luck involved. I think the main thing, whether you're investing in stocks or you're doing Bitcoin or anything else, is you have to know at least when to take out a portion of your profits so that even as it goes up, you're not just like, it's going to go up forever, because obviously it's not going to go up forever.
But most people think that.
Right, most people think that way, but that's also because most people aren't financially savvy, as you're aware. So they just, when they see it up, they just think it's up forever. Or they're greedy. I think it's a combination of a couple things.
That's what happened to the real estate market.
Yeah.
Like you're in the real estate market, right?
Mm-hmm.
Did you experience the real estate crash in 2000, what was it, 5, 6, 8? Was it
No.
8?
That crash was before my time. I was getting into real estate. Like I got my license during that time, but I was also going into architecture school.
Right.
And at that time, it was just way too hectic for me to do anything outside of school. Like I slept at my desk more days than I slept in my bed. It was crazy. So I didn't end up doing anything with my license, but I at least started to learn about real estate.
Yes, you started to learn.
I started to learn about real estate. And I think that then carried over years later. Once I graduated, got my architecture degree, started working professionally, started understanding design, and then applying all that I learned to what I do now.
Right.
So that's where it's been my benefit. But as far as getting into it and investing that I wasn't doing.
So every market, I think, has its ups and downs, right? Um, what are your thoughts on the '08 crash? When you were in school, did you study anything about that or
I
with
honestly,
real estate?
we didn't, but I wish we did, because I think the more someone learns, and it just goes to where American education is. Like, it isn't in the things that actually make us money. It's in everything around money, but not actually money. And had we have learned about the real estate market, we would have actually been better designers, because a lot of our teachers after we graduated, they're like, there are no jobs for you guys. Go get another degree, stay in school a little longer, maybe look for something
And
on
what
the
year was
side.
that? What year did you
I
graduate?
graduated, so I graduated with well, I didn't technically get a bachelor's. I skipped it to go to my master's, but that was in 2008 is when I would have gotten my bachelor's degree. So right when we were getting out is when the crash had happened.
Right.
I stayed in school for 2 more years and I got my master's degree. And that master's degree, which at the time I thought is what I needed to become an architect, lo and behold, at like our last year of school, our teacher's like, no, you could have just used your bachelor's. And I'm like, why am I here? Like, I just waste all this time for this fancy piece of paper. But I was at least grateful because I went for the harder degree as opposed to getting
Right.
something that. So it
And
was
it's
to
a
my
lesson,
benefit.
right?
It was another lesson. And I also think it helped me push off looking for a job, because at that time, in 2008, there was nothing. But by the time 2010 came around,
It was starting to recover.
it was starting to cover a little bit, but it was still very difficult unless
Right.
you were like really in the field.
Right.
So what I did is I just started to apply all over the world. I applied Beijing. I applied in literally everywhere. I applied in Paris. I can't even tell you how many countries I applied to. I think it was about, in total, my applications were about 300 applications at that time.
And I believe in that. You know what? Because people are like, oh, I'm just going to be strategic. I'm like, you send your resume to Tom, Dick, and Harry. When the offers start coming in, then you can be
Exactly.
strategic.
And that was my thought process. I was like, because all my friends came back and said the same thing. They're like, we can't find anything. Like, okay, you applied to 6 people.
Yes.
But I'm gonna cast a huge net.
Yep.
A giant net.
I'll make my decision when I get the offer.
There you go. And then when I brought that net in, only like 6 people responded. So then I was like, okay, there's clearly nothing out here, which is when I actually left the US and I moved to Holland to look for a new job out there and start like a new life, new degree, everything. It was a really short stint, but it was still something that I used to then apply to what I
Right.
do today. So
Right. And so going back to the real estate crash, right? So for me, I didn't think that the market was going to be that bad, right? Because I didn't realize that we had mortgage-backed securities. So I don't know. Do you know?
yes, I know about more mortgage-backed securities now because I'm in real estate.
You're
But
in
at
real
that
estate.
time, I didn't have a clue what it
Yes.
was or what it meant.
I didn't realize that we were packaging these bad mortgages
Mhm.
and reselling them as investments, right? So we were scamming, we were being scammed,
Yeah.
basically. So I understood. What did I understand? Because I bought my house that I used to live in then in 2003.
Okay.
So we were moving to Florida. So the market when I bought my house was just starting to go up.
Yep.
Right? Between 2003 and 2005, my house price doubled. Right? And a lot of people sold and they did whatever. And then people were so greedy. They started buying 5, 6, 7 houses. They refinanced. They did all these things. They bought interest only mortgages.
With a IOU piece of paper.
Yeah. And it was like,
No financials.
all right,
Yeah.
what's happening here? And people are like, you know how much you could take out of your house? You could do this, you could do that. I'm like, all right, I don't know about this. Like, I'm not, whatever. I'm not, because I think that when you get a mortgage, a 30-year mortgage, right? At a certain point, and if you intend to live in that, if it's your house, your home investment, that's going to be the hardest time in your life, because that 30-year mortgage is your life should get easier, right? So in 30 years, the payment that you're paying now, because you're going to be making more money later and you're going to whatever, if you can sacrifice and do that at that moment, then you shouldn't be foreclosing 20 years later, because 20 years later, you should be in a better position than you are on year one. So if you are not getting an interest-only loan, or you're not doing some baloney crap stuff, then there's no reason for your house to be foreclosed on, especially if you are being conservative, saving your money, whatever it is, like you're building your life.
Yeah.
So if you're building, right, so you're building safety nets while you're building. So
if you're responsible, you're building safety nets. I think what happens to most Americans is like as we build, we spend.
Creep.
Yeah, exactly.
We have lifestyle creep.
Yes, it happens all the time, right?
We have lifestyle creep. But okay, so let's say we do have lifestyle creep, right? Mm-hmm. And we don't lose our jobs and whatever it is, right? Because then you're starting off with a 30-year mortgage, and let's say your payment is $3,000. Mm-hmm. If it's your home, your homestead, then your taxes shouldn't go up much because you are homestead. Most states have a homestead.
Yeah, I think 3%, right?
And
like the max.
Yes, I mean of whatever it is.
Yeah, what it can go up.
Like for example, my tax went up $200 this year. Mm-hmm. So you're homesteading, you're locked into that specific property tax. It's kind of ran amok down here in Florida with our house insurance
until they hit you with an assessment of your property being worth more. But that's a whole other conversation.
Yeah, but also if you are homestead, if it's not an investment property.
No, even for mine, like I have a homestead, but I'm doing improvements on the house. Yeah. Now they're gonna, because when you apply for permits, you have to submit to the county that you're in, saying like I'm doing these improvements.
Right.
Well, they're gonna now evaluate your property based on all those improvements that you're gonna have.
Right.
So that homestead, even though it applies to that 3% that goes to the current value.
Yeah.
Once you put all that money into it, and now it's worth even more, now they're going to hit you with an assessment based on that new value. That now is going to go up 3% based on that.
So I thought you could fight that. So if
there's a way to fight it, I would love to know.
Because we had a lady down here, and her name was 𝐿𝐵 Gardner, and she recently passed in a tragic car accident. Oh, no. But she was one of those people who taught me that you could fight that.
Interesting.
So I would, if that happens to me, because I've done a lot of, tax collector, please do not watch. I have done a lot of improvements on my house.
Yeah.
And but it's roof and all these different things. And you have to apply for permits for all of those things, right? And she said to me that you get, if you don't believe, if this is what's happening to you, you get one of those assessor people to investigate it and look at it. I mean, Donald Trump does it.
He's also a billionaire.
But he fights Palm Beach, the county, and
No, that's what I'm saying, is that as a billionaire, he has billionaire buddies and tax advisors that can tell him, okay, here's what we're gonna do. Versus
but we can do it.
You and I were like, we got to figure it out for ourselves.
We can do it at a school. We can hire one of these.
I agree with you.
It's going to be worth it. It's worth the investment.
I agree.
So I would say try that.
Okay. I mean, I never even thought to try it as far as fighting it, but okay.
Well, Cynthia says you can always fight it. So if there's one thing that I remember from Cynthia is she says you look at it and you fight it. Because, if you believe whatever you believe, especially if it's your homestead property, then, I mean, the investment properties, Right. I think people fight those too, but I just think that with the homestead property, you might have a case. I don't know.
That's fair. I think it's a fair point. It's worth at least trying.
It's worth trying.
Yeah, it's worth trying.
So with that crash, going back to because we're deviating, which we always do. Chala, I'm sorry. So with going back with the crash of 2008 is, so I personally, right, had a house that went from maybe 320 to 620, maybe even 700 or 800, I don't even know, and then went back down to maybe 250.
Yeah, it's low, right?
Right. So I rode this roller coaster, but I had a fixed rate mortgage, right, that I was paying. I did not lose my job. So I was making my money, I was paying my mortgage, and yet I saw all these people around me not pay their mortgage, get things forgiven, whatever, but I was still making my mortgage payment because the mortgage payment didn't change. It's the same mortgage, not because the housing market crashed that, now I need to short sale and whatever. So I was riding that wave. I rode that wave until the housing market came back up, and that And 18 years later, that's when I sold my house.
That's awesome. It's great that you stayed in it.
Yeah, but what I'm saying is that there are options if you're responsible
Mm.
and you're not too greedy. So, because there's a lot of people that I do know that said, okay, well, I'm going to invest in this housing market when it started going up, and they bought their stuff, and then interest only mortgages and all of that. And then when the housing market crashed, the mortgages came due
Mm-hmm.
and they couldn't sell it because those are like the people who wanted to do the quick investment and got into more than they could,
Mm-hmm.
right? Because we didn't know, first of all, if you're going to get an interest only mortgage, you have to be able to pay it, right? That's number one. And when you are going to get an investment property, you have to be able to pay it. If you have to have plan A, plan B, plan C, right? And then the second part of that is that you can't get too greedy if that's not your business.
What define that for people? What do you mean you can't get too greedy? How does somebody know when they're getting greedy?
So for me, I didn't take the money out of my personal home
Mm-hmm.
and buy 10 properties at interest only because
But if all 10 of those cash flow, is it being greedy?
no, it wouldn't. But then what happened with for the interest only mortgages,
Mhm.
the mortgage, first of all, I don't believe in interest only for long term, right?
Yeah, for sure. Definitely.
Um, so, and if I am an investor now, right? If I am, that's my job, that's different. So I need to understand my business plan and my calculated risk there, right? So, but if I'm like, all right, this market is wonderful and it's great, and this is what's happening, and I'm getting all these interest only loans, and what am I going to do with the property? What is my plan? Like,
Okay.
where am I going?
Yeah, what's the exit strategy?
Yeah.
What are you planning to do with
Yeah,
it?
what are you planning to do? You plan to just keep going with this? Like, you have the risk of renting, and your renter's not paying you.
Mhm.
So if your renters don't pay you, how much emergency do you have? Like, what is your business plan?
Gotcha.
Right? So don't just throw numbers in the air and like, all right, like I'm gonna put 50 cents in the slot and hope for the best.
Yeah.
Right? You have a plan. Like,
Mhm.
what is your plan? Like, but there are people who just went out there and are like, all right, I'm gonna buy 5 properties, didn't evaluate how much it would cost to rent, because when you invest in real estate, it's not just okay, let me just sit there and watch it. It's work.
Yes. You nailed it. It's a lot of work.
It's work. You have to be smart about it.
Mhm.
You have to understand what the best case scenario is and what is the worst case scenario, just like any other investments,
Mhm.
right? And understand where your risk is. And then you're willing to take the risk.
Do you think a lot of people invest in real estate because they just know, like, oh, it's real estate. Everyone gets rich off real estate. So they think that, okay, if I buy all these properties with interest only loans, even though it's interest only loans, at least, well, I own 5 properties. In time, this is going to go up. Like, do you think that is probably one of the downsides, is that people think too much about what the property is going to be worth versus how much they have to pay on it, like right now?
I think that's twofold,
Mhm.
right? I think that the interest only loans on properties where you don't plan to turn them over is the same thing when you're having a business plan. For example, I have builders as clients, right?
Mhm.
So they will go to the bank and say, I need $3 million to build these houses. And the bank will maybe give them interest only for 2 years. So they're taking these loans out for cash flow purposes, right? So they need $3 million. When they sell these houses, they will make the money back and they'll pay off the loans.
In a balloon.
Right.
Mhm.
So they'll be done. It's interest only. The loan will be called, blah, 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 blah. So the bank is not just going to lend them money on just saying that. They have to show them their business plan. Like, okay, you have the lot. How many lots are you doing? What are the price to sell it? What is the price to buy it?
Mhm.
And, that type of stuff. So then the bank is going to invest in them, right? Because you have a business plan. A lot of what happened with the '08 market is these people didn't have a business plan.
Yeah. And banks were accepting that.
Banks were accepting
That
that.
was also the big problem
Yeah.
too, right? It wasn't just like the people were ignorant is that the
They
banks
were
were just
allowed to
ignorant.
do it.
Exactly. They were enabling it.
Yes, they
You
were
know?
enabling it.
Yeah.
They were enabling people to be irresponsible.
Hmm.
And then, but the part that I did not realize is the mortgage backed securities, because that's really where it got really bad.
Yeah.
I knew in my mind that the market was going to go down, right? But I did not think it was going to go where it went.
The other thing too that made it even more difficult was the fact that these mortgage-backed securities, they're defined like triple A class, like
Yeah.
the best kind that you can get, where everyone's like, okay, I'm doing my research, I'm doing my homework, but then come to find out that what they're classifying and defining as high quality, high class is actually like a piece of trash.
Yep.
So it made it even more difficult for the people who were trying to do their best and invest in things that they felt was going up.
Right.
It's just, as you said, come to find out, all this time later, they're like, wait a second, this isn't backed by anything.
It's not backed by anything.
Mhm.
So that's my point, is that that's where also I learned to look. So going back, so the next part of it is you can survive any type of economic downturn
Mhm.
if you are willing to ride it out.
I agree with that.
So even with the real estate market,
Even
right?
phone.com might be worth something today if you don't realize.
Phone.com is not worth anything today.
You sure? Have you checked?
I cut my losses on that one. Okay. But if you are responsible, you can survive a downturn. I knew that my house was going to be worth it. I'm going to ride it out. Just like how if the market crashes today and Nvidia goes down to, what is it, 140, I think 150 now. If Nvidia goes down to $20, I still know that, the backing of, or let's use a better stock. Let's use Apple, right? For example, if the market crashed today, Apple is, I think, 240 right now. And it goes down to 150, I'm holding my Apple, because I looked at the market statistics on Apple. I looked at what they're making.
Mhm.
I looked at what what their balance sheet looks like. And if your balance sheet is asset heavy, then you have the money
Mhm.
to stay afloat. So that's the other thing. When the market is bad, so for example, one of the builders that I had, right, they went through the crash in 2005. They lost a lot of money, but they
Really?
survived.
They stayed in it.
They stayed in it.
So they had money.
No, they were able to leverage.
Did you find out how they leveraged exactly?
They were because they personally guaranteed a lot of stuff, right? But they did lose money in the market. They were investing in a one of the things that they lost a lot of money on was this nursing home facility that they were investing in.
Okay.
And there was hundreds of thousands of dollars spent on the land and all these different things, but their partner backed out. So they lost. And so that was, but they had money to put back in. They coasted it until they were able to do it, and now they're back in the market on different levels and working.
They're probably lethal now.
They're in the luxury home market,
Yeah.
but they're becoming lethal.
Mhm.
But they were able to ride it out because they were sensible investors. So it's not like they didn't lose. It's that they were able to ride it. So
Yeah.
so being a calculated investor, being a calculated risk person, is being able to ride it out, ride out the bad parts of a market, and coming out on top when it gets better.
How much of that do you think also attributes to someone's personal tenacity?
Oh yeah, you have to have guts.
Yeah.
You cannot be a scared person.
Right. So, but think of how most people are in regards to money. They're very fearful, and the
Yeah.
more of it they accumulate, sometimes the more fearful they get.
Our culture is big on that.
Exactly. So that's so how much of that do you attribute? So yeah, those guys made it through, but to me that also speaks to the spirit inside of them, like what they believe and what they felt they could do to get
It
through
also
it.
has to do with how educated you are
Mhm.
about what you're doing, right? So going back to those people getting the interest only loans
Mhm.
to buy 5 rental properties.
That's literally me right now.
They're not. They're not. But they're not. There's a difference. That's
Yeah,
not
exactly.
you.
Yeah.
You know.
I have a plan. I know exactly
Yes.
what I'm doing. Like
Yeah.
exactly
You're
doing it.
not flying by the seat of your pants
Not at
with
all.
no plan, no backing, no understanding.
Yeah.
Just like my builders, right? So they are educated about what they're doing. They have a plan on where they're going. You know, it's not like they're just throwing the money out there and saying, I want to get rich tomorrow.
Yeah.
You know, your business is your business, your business plan. So that's where it comes in is you know, being a calculated risk taker is having confidence in yourself, but also understanding where you're going. You know, understanding, okay, this is my plan.
Yep.
Because we're sick of a lot of stuff. Like I've invested a whole boatload of money in the Modern Savvy CPA and I have not monetized yet.
It's okay. Your time is coming.
But
My
I have
time
a
is coming.
plan.
Yeah, exactly.
I have a plan.
Yes.
And I'm working on my plan.
Love it.
I'm putting everything in. And I believe in what I'm doing. You know, I believe in what I'm doing and I have a plan. I'm not just throwing shit to the wind. Right? So that's what so I'm not saying the road is going to be like all roses.
Right.
Right? It takes
But
time.
but how again, like if you have it in you and your builders had it in them, what is it going to take for other people, everyday people, to be able to make it through tough times so that they can see the other side of it?
Financial education and financial tenacity gets you and the right mindset.
Mhm.
So the right mindset is understanding what you're doing and believing in what you're doing. And you can't do that by just get rich quick schemes.
Got you.
You have to educate yourself. You have to follow the right people. You know, when you're watching TikTok, you can't get rich in 3 hacks. They're lying. 1 inch of what they might be saying to you is true, but it's just the starting of your journey. Investigate further. Vet the people who you're listening to. Don't just listen to people who, you know, are trying to get you into some scheme. Because in the end all be all, you got to put in the work. You got to have the backing, and the backing is what's in your mind. You know, it's educating yourself about that specific thing that you're doing. Because when times get rough, right, when and you think you're about to lose your pants, that's where people fail.
Gotcha.
People don't fail when it's fun and roses and it's pretty.
Mm-hmm.
They're failing because they cannot stomach the rough times. And I guarantee you, on every journey, there are rough times. And when you get over that journey, when you get over that hurdle, that's what's going to make you better. That's where you're going to learn. So yeah, you know, things are going to be bad along the journey, and you're going to question. Do you question?
Oh, every day. Every day I question stuff. But I also remind myself too that I've done a lot and I've come far.
Right.
And I've had wins along the way that have helped support my beliefs as to what I'm doing is the right thing.
Right. And your belief is not, you're not pulling it out of your ass.
No.
You know, you have an education to back you.
Yeah.
You've listened and you have good people around you to advise you when there are times that you need that. You have learned on your own your lessons along the way that will work with that. And then, you know, believing in yourself just doesn't come with, I'm just going to believe in myself with no understanding of what I'm doing. You know, believing in yourself comes with, this is my journey and this is all that I have put in my journey. And this is where I want to go with the journey. And you always, for me, reassessing every time, am I doing my best? Because I am a true believer in faith and that God will do the rest. But I have to reassess every single day. Am I doing my best?
Got you.
I even ask Chala once in a while, okay, what are we doing? Are we doing everything that we need to do to get to do this? Are we doing everything we need to do this? All
Can we do it better? Can we be more efficient?
Yeah, could we be more efficient? What are we doing? Are we doing everything that we need to do? And that needs to be to accomplish where we want to go or to go along on this journey. So we're questioning that all the time. And I feel like that's what we need to do. I have confidence in myself and we have confidence in each other, right? But
you guys started the podcast.
You
made it happen.
But we have to
we
have to keep checking. Are we doing what we have to do? going back to the whole Bitcoin thing, this is where, so I have not ventured into the Bitcoin market. And this is kind of where our question is. And I know a lot of our listeners believe in investing, and we're going to talk a lot about investing. We actually even talked about hedge funds in one of our other podcasts.
Oh,
And in my day, hedge funds was the Bitcoin market, because it's very complicated and you need to understand, the understanding behind hedge fund is a, like, that was the hardest class in school.
really? Okay.
So, and it's a very complicated situation, puts and calls and all of that other stuff too. So with Coinbase markets, I don't particularly understand it myself. So this is what I'm telling you. It was like the phone.com thing.
Yeah.
It's a hype for
Yeah.
me, right? And I went with the hype
Yeah.
then. So you can't blame me for being a little hesitant now.
No, that's okay. I think it's normal for people to be hesitant. If anything, I think you should be hesitant when people rush to the market, right? Warren Buffett always says, like, when people run one direction, you should run the opposite. So I do understand the hesitancy, and I do think there's some validity in being hesitant when you just see everyone say, buy this, buy that. But to me, when it comes to coins, blockchain, it's just like with AI. It is going to become the future at some point. Now, I think AI is more right now. It's happening around us. There's ChatGPT that I think more and more users, like the number of users that grows by on the daily basis is insane. Versus things that are coin based, which is still it's an asset class that unless you understand it or unless you're in the hype, you're probably not going to invest in it. But if you understand the backing to it and how it works, it makes the people who do invest in it that much stronger in their beliefs, because they know that it's going to be the future.
So then I'm going to question you there,
Sure.
right? Because my belief is there needs to be a universal currency. I 200%
Why so? Why do you think?
I agree that we need to have a universal currency. I think there's going to be a digital universal currency, not just a universal currency, because despite our America First situation that we're in now, so you see, I grew up during the Cold War, right? And America was first then. America was first. America was last. America was it.
Yeah.
The globalization, where was that? There was nothing. Like during the Cold War, it was America. All the economics that I learned and everything that has to do with economics, that's when I fell in love with the American economic system, because the way that we do a monetary and fiscal policy here is like nowhere else, right? So understanding monetary and fiscal policy is one of the keys to my understanding of the whole economic world and how I can keep my own safety net. So, but that was before the internet.
Right.
That was before the World Wide Web, and the World Wide Web has made the world more global. It is not America alone anymore. We might want to believe, and we are on top, and I believe you should take care of your house first. I just think that globalization is here to stay, and it's not going back.
Okay, so if you feel that way, then what do you say to the people who invest in coins, right, in cryptocurrency, as far as it being the closest thing to a centralized currency?
So I also believe in regulation, right? Because I believe that people will steal, cheat, greed.
That will exist till the end of time. That will never change.
As much as you let them.
As much, of course. Of
Okay?
course.
So I believe, so after the real estate market crashed, or in 2008, 2000, whatever it was, Dodd-Frank came into play. So that we regulate after. We don't regulate before.
True.
So
Because we have nothing in history that shows us why we would need to regulate it until something happens.
yeah, but you could see it. I saw the writing on the wall.
Apparently,
I mean,
America did it.
We see the writing on the. I'm telling you, I've been dealing with the Coinbase market with tax returns for the last maybe 6-7 years. And at one point, when we started having to report it on the tax returns, there's no regulation on how. They don't tell us anything. So we don't know. There's still no regulation. We do our best to how to report it. And I refuse to deal with a client because their Coinbase, the stuff that they send me is such a mess. I can't figure out how to do okay, what is the cost and what is the proceeds and how
I
do you
traded
get
it
to
on
the
this
point?
day and I sold it to this one,
And
now
I'm
it's on
like,
this.
okay, no, like goodbye, see you later. I'm not doing this. Like that's gonna take me 10 years to figure this out, and you're not gonna pay me to do your tax return. So I used to say no, I'm not doing it. Like unless you bring me a proper cost basis statement. This is when you bought it. This is how much you paid for it. This is when you sold it. This is how much you paid for it. The difference is your gain or loss. That's how we do regular stuff, right? Regular. If you buy Apple, this is the date you bought Apple. This is how much you paid for it. This is the date you sold it, and this is how much you sold it for. And the difference is your cost, is your gain or loss. The Coinbase statements were like hundreds of pages of I have no idea.
Because it's like so many trades that just happen inside of the coin.
So they're asking us to report this, right? And there's no regulation on what the company needs to give to their people.
I think because the U.S. hasn't figured out how exactly they're going to have people do it, so they're just having you report it just so they can collect, just so they can collect some of the.
That was 8 years ago. They still haven't figured it out.
That's what I'm saying. Like I don't know that they're going to come up with a solution fast enough. So they're just like, let's just get people to give us some money. So okay, everyone, go report it. So they're not even any regular. Just go report it. And now whoever reports it, okay, well we're getting some taxes versus the people who are just like, well, they didn't say nothing, so I'm not reporting nothing.
And I think that's where the taxing authority lose out on money. It's the same thing with reporting 1099s, like 20 years ago when I was in the tax world, barely anybody had to report 1099s. You pay somebody for something, you didn't have to report what you paid them. And those people don't report it on their tax returns. So now they're keeping a track of all of that, and they're tracking all of that. So they're losing out, and in the long run, we're going to end up paying more taxes.
Well, some people are end up paying more taxes.
Yeah, small people like us.
Yeah, exactly. Small guys pay more taxes.
So that's my thing is with I believe in the universal currency. I do think that we are going to have because cash is not king anymore. I'm sorry. Like, I mean, I don't spend cash. I don't have cash. I can't track cash.
I love cash.
I don't.
But I don't love my cash. I love your cash, and I love Charlotte's cash. I love everyone else's cash, but my own cash. That's where I love cash.
Yeah, but money is different from cash.
How's that different?
Cash is dollars.
Yeah.
Like actual paper.
Oh, like a physical piece of paper.
Cash is not king.
Oh, physical piece
That's
of paper.
what I mean. That's what I mean by having a digital
I'm thinking
currency.
liquid as opposed to cash. Gotcha.
Cash, to me, the paper money is not king. You can't track it. And for anyone to understand how they spend their money, they need to be able to track it. And that's how you get financial freedom. Yes, the government might be tracking it with you, but they don't know as much as you think. Trust me. So for me to understand where I'm going, even when we're investing, is, well, what did I do? What did I do with that money? When you're spending cash from an envelope or spending like actual paper dollars, you don't remember what you did with it at the end of the day.
Hell no.
Right. So how is that going to help you? Like, you don't even remember that you can deduct that. Like, how do you, like, I have lots of clients that try to find ways that to oh my gosh, I don't want to pay any tax. I want to deduct this. I want to deduct that. But they're deducting the kitchen sink when if they had tracked what they actually spent on their business, would it be more than the kitchen sink? So why are you going to be so stupid, right? Why are you going to be so stupid and deduct something that you're not supposed to and not track the stuff that you're supposed to deduct?
Do they come with a big shoebox of receipts?
Yeah, I don't do shoe boxes. Like, that's why I'm saying.
I was just gonna say that would be the only thing I can think of if you use cash, right?
That's what I'm saying. But that's what I'm saying is that there's a shoebox, you don't even remember. They don't even remember where the receipt is. If you come with a shoebox with a receipt, I can't read half of this because it's faded already.
Oh, yeah, that does happen.
Isn't that true?
Yeah, it does.
So I always tell my clients, they're like, "Oh, I have to have a loss. I have to have a loss." I just spoke to a client yesterday actually, and he's like, he invested $500,000 in a company, and the guy's like, "Okay, don't worry, you're gonna have lots of losses to deduct, lots of losses to deduct."
Why do people want losses? How do they show that they made any money?
I'm like, listen, I'd rather you make $100,000, give 25 to the IRS, and keep 75. If you have $100,000 in losses, your basis in this company goes down by $100,000. You lost $100,000. Yes, you can deduct 25 of that in taxes, but you still lost 75.
Do they not want loans? Do they not want to show that the business is growing? Do they not want to sell it one day?
That's exactly the other point that we've made that point to him, and then he tells me, "Yeah, that was my mentality 3 years ago until we started working together." Mm-hmm. That's not my mentality anymore, but this is this guy's mentality in the company that he invested in. So 2 tips when you are going to invest or loan somebody money, right? I'll tell you 2 tips. One is you don't want losses. If you're going to invest money, you don't want to lose your $100,000 to deduct 25 of that 100 because you're still net out $75,000. Yeah. So don't want losses. That's number 1. Number 2 is, I'm going to tell you that as soon as I remember. But number 2 is, I'll tell you the number 2 is, if you're loaning a company money, right? Let's just say you're loaning a company money. Eventually, you might turn that money into stock or something like that. But always have the person that you are loaning a small business money personally guarantee your loan. So let's say,
or have it backed by something, real estate,
or have it backed by if you're loaning it for real estate.
Yeah,
but for the most part, let's say I loan Jay $500,000, and I loan Jay, if I had it, I loan Jay $500,000 to J LLC. Jay, when he signs that promissory note, is going to have to personally guarantee me that $500,000. So if Jay, this is how wealthy people file for bankruptcy 10 times over and still have money. Mm-hmm. Right? Am I telling you the secret?
No, I mean, you're right. It's true.
This is because that Donald Trump filed for bankruptcy, I don't know, 8, 9 times, and he's still a billionaire, a trillionaire, a gazillionaire, because he doesn't personally guarantee any of those loans.
Yeah, they're all non-recourse loans.
They're not. Nobody can come after him for it. So if I'm loaning you money, buddy, you're personally guaranteed because you're gonna owe me that money for the rest of your life.
Okay.
Your company can go bankrupt.
Don't borrow from Sharon. Got it.
But that's what banks do.
No, but it's true. That's what banks do. Until you play the big boy and big girl game, and then you don't. Then that you get into like Donald Trump, where you have non-recourse loans and they're not personally guaranteeing anything. And if it goes belly up, it's like, okay, on to the next.
On to the next.
Yeah,
right.
But for us, small game, people, exactly the little game, we personally guarantee.
Well, we didn't get to talk a lot about your business stuff, so just for a little while.
Sure.
For maybe the next 5 minutes, which we're totally going over on this podcast, tell me about your venture in your real estate venture. So we talked about blockchain. Mm-hmm. Where you do invest in a lot of coins.
Yes.
So on our next season of podcast, I want to hear how they're doing.
Sure.
Okay.
Of course.
So you'll come back and talk about it. Mm-hmm. But talk to me a little bit about your real estate ventures, because Jay is not a Joe Schmo investing in real estate. Jay's business.
Straight business
is real estate.
Yeah, I live off real estate. So I left the 9-to-5 job market in 2017, and that's when I started practicing architecture on my own, working for clients, doing a lot of design work specifically. This is in New York. Then when I transitioned to Florida from New York, this is like during COVID, that's when I bought my first property, and I started to use all my design principles that I learned in school. But instead of doing it for clients, now I did it for myself.
Right.
And since then, I've literally just been buying and selling properties one after another. First year I did 1, second year I did 2, third year I did 4, and I literally just been like doubling every year since the time I bought my first property. Currently, I have multi-million-dollar flip in Boca. I have a $1 million flip in Boynton. I got another one that's in Green Acres. I think in total I have like 8 properties right now. Some are rentals, some are flips, and then I'm getting ready to buy another multi-million-dollar deal in Miami in about 2 months. So
Awesome.
coming together.
It's coming together.
Yeah, it's coming together.
Yes. So what would you say your biggest issue with your business right now and in the real estate market, and your biggest win?
My biggest, okay, good. Biggest issue, cash flow without question. Without question. Because real estate is expensive.
Yes.
And contractors are expensive and materials are expensive. So in order to carry you through multiple projects, you have to have a lot of cash on hand. And it gets really difficult, especially as delays happen, because as we mentioned before, I'm on interest-only loans, and interest-only loans, like there's no pay down. So the principal balance stays the same forever. I'm just paying the same mortgage, or
until you sell your
until
flip,
I sell my flip,
and then you play the balloon. Yes.
and then I pay a balloon payment of everything. So when there are delays, that's where you run into challenges, because now you're expecting this thing to only take you 4.5 months. Now it's taking you 8 months. So I've now had to carry this loan that much longer, and I've had to hold off on buying some other opportunities that I could have, because I missed out on, because I'm not selling it at the right time. And that add on top of that, when you have so many of them going on at the same time, you realize very quickly that having a strong cash flow system is paramount. Like if you don't have the proper cash flow system, this is how people drown. And I think in the last 2 years, I really got my ass kicked. Like I really did. And I think,
but you're learning.
I'm learning. I take nothing away from it. I'm grateful for everything that I've done. And I think even through all the challenges that I faced, it's given me more strength and just determination to get to the end of it. And I think for a long time, a lot of people that, whether they're family or friends, and they saw how much I was struggling, they're like, you need to do this, you need to do this. And I kind of blocked out the noise. Not that they were trying to, they wanted to help.
They want to help.
Yeah, they wanted to help, but they didn't understand or see what I saw.
Right.
And because I knew that I was struggling now, doesn't mean I'm going to struggle once I get to the finish line.
Right.
I was like, I got to fight to the finish. And once I fight to the finish, I know it'll be good. I will say that if I were to do it over again, I would not have gone so ambitious and I'm going to buy this and I'm going to do this. And these 6, it's too much. It was too much, especially because
you will start off a little slower.
I will start off a little slower. Right. Yeah. And I'm proud of the fact that I was able to get through so many of them. But again, what I was saying, the last 2 years have been a struggle because it's been compounding. I have properties that I've now had for almost 3 years that I haven't touched yet. And I've been carrying it interest only since the day I bought it. So imagine like 2.5 to 3 years of interest only payments on a couple $100,000. So I would say in total, I probably spent at least $250,000 on interest only loans just in the last few years.
Well, but this is where your learning lesson is, and your business plan is going to change.
Yes, I do agree with that for sure.
Yeah,
and I'm kind of glad because it's like it was a slap in the face, but it was one of those that was like, okay, slow down.
Yes,
and you're right, and it's something that somebody like me needs. Just because I think if I never got to this point, I would just think, let me do triple that, let me quadruple that. Like I don't know where the break is, it's like all gas.
But which is a good thing to know, because now that you've learned that lesson early, it's like when you start driving, you get into a car accident.
Yeah.
What happens, right? You learned a lesson from that car accident. Whereas if you had gotten into the car accident 5 years down the line and it was a really bad one, what was the experience that you had? So now you've had the experience of having that accident.
Yeah, for sure.
So it's a lesson at that point, whereas it's going to alleviate the bigger issues that, you could have had on a bigger scale later. So now you've learned this. So moving forward, you're going to get better.
100%. I'm happy for the $100,000 lessons so that when the $200 million lessons come, I'm well aware.
You're good. Yes.
I'm good. I know what's to come. So, but it's been a journey. It's been a journey.
Well, we want to hear more about the journey when you come back next season on our podcast, letting us know which houses you've sold. So Jay has 8 properties. We're going to track him, and we're going to see what happens next season which property he sells $1 million property, and we're gonna get his $1 million listing.
Yeah.
And
Well, I'll post like a link so that you can see it for yourself.
definitely.
Right.
Yes,
Exactly.
awesome.
Yeah.
So and we're interested to hear that. So this was a very interesting conversation. We talked a lot about investing in different avenues. A lot of stuff that we never learned growing up.
Nope.
But we're definitely going to teach our kids.
100%.
And we're trying to teach you guys, that there's opportunities in this great country of ours that we can take advantage of every day if we are being smart about educating ourselves on what we're doing. Thank you for tuning in to Get Wealthy with me. Get ready for another episode in another week.